Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Tuesday, July 15th. Before we begin, I wanted to remind everyone we do have a daily newsletter delivered right to your inbox for this podcast, if that form of content is what you prefer. We just hit 1K subscribers for the Substack, and I can't thank the readers enough. The link is down below in the show notes. In today's episode, xAI is looking to raise money from a familiar face. Then, Google's latest acquisition of Windsurf. And finally, stick around to find out the final numbers from Prime Day. Stocks snapped a multi-week win streak last week after Trump continues to ramp up tariff talks again. The White House has been sending out tariff letters to trading partners, setting rates which are similar to the rates from back in April. Trump is slapping Canada with a 35% rate, and the EU and Mexico are getting hit with a 30% rate, starting on August 1st. And as I mentioned yesterday, we're getting earnings from big banks like JP Morgan, Bank of America, and Wells Fargo this week. We're also hearing from companies like ASML, United Airlines, and Netflix, which I can't wait to hear what they have to say. So yeah, we'll have a lot to talk about this week. Let's run through some headlines, starting with xAI. Elon Musk's AI company, xAI, is looking to raise more money at a $200 billion valuation, and one of the investors might be Elon's other companies, SpaceX. The Wall Street Journal is reporting that SpaceX is investing $2 billion in xAI, which would be SpaceX's largest investment in another company. And this really isn't too surprising, because Elon has a history of using his business empire to boost his other ventures. He once borrowed money from SpaceX to fund Tesla back in the early days, and he even used SpaceX's equipment to help launch the Boring Company. You know, xAI is playing catch-up in the AI wars. They're trying to close the gap between OpenAI, Meta, and Google, all of which are spending billions of dollars to build the best models. And while xAI's new Grok 4 model has gotten strong reviews, it has also been in the news for some wrong reasons as well. Grok went pretty rogue last week and started posting some very offensive stuff. Not exactly the kind of publicity you'd want during a funding round, but that hasn't stopped Elon from doubling down. If you guys remember, he merged xAI with X earlier this year, and he's already starting to embed Grok into Starlink, Tesla, and even has plans to deploy Grok into humanoid robots. Let's shift gears and talk about Google. Google just pulled off a major heist over the weekend. The tech giant swooped in to buy Windsurf, the AI coding startup that OpenAI was planning to buy for $3 billion just a few months ago. But it looks like that deal is dead because Google swooped in and hired Windsurf CEO Varun Mohan, their co-founder Douglas Chen, and some of their top researchers to join Google DeepMind. Now, to avoid getting slapped with any antitrust investigations, Google didn't acquire Windsurf outright. Instead, they did what's called a reverse acqui-hire. They're paying $2.4 billion to license Windsurf's tech and bring the talent in-house. But as part of this deal, Windsurf will stay independent and they're free to make deals with other companies, which they didn't wait any long to do. Earlier this morning, Cognitive recently acquired the full company, the IP, and all brand deals related to Windsurf. So looks like Windsurf employees will now be Cognitive employees, and Windsurf's top executives now work for Google's DeepMind. Rest in peace, Windsurf. But I mean, it is clear that the main prize here for Google is the talent they got from Windsurf. Windsurf specializes in agentic coding tools, basically AI agents that can build software just by taking in a prompt or some instructions without any coding experience required. This kind of coding is colloquially called vibe coding, and it has gotten very popular recently. OpenAI has a tool called Codex that does that, and Anthropic has Claude Code, and other companies like Lovable and Cursor are building this tech that help vibe coders vibe. So Google just loaded up talent in that department, and with all the people they hired from Windsurf, they could massively expand Google's developer offerings under Gemini and help it compete more directly with the big boys. The Verge says that Windsurf team will now focus specifically on coding tools within Gemini. But I mean, the broader trend here is that AI engineers are continuing to get scooped up from big tech companies like their NBA free agents. Google, Meta, and Microsoft are handing out max contract deals right now. Amazon Prime Day is behind us, and the final numbers weren't as bad as some expected. Amazon reported that it was their best Prime Day ever, with the company reaching new records on sales and products sold. Now, the event did start off slow for the first few days, but it ended up kicking into gear on Thursday with a 165% sales jump year over year. You do have to keep in mind that Prime Day this year was 4 days instead of 2, so it's not surprising to hear that Prime Day had more revenues overall than last year. But what's interesting is that other retailers like Costco, Walmart, and Best Buy also started offering discounts in the same period as Amazon, and they also saw a bump in sales. So it looks like Amazon's not the only one benefiting from Prime Day anymore. I think these retailers have successfully branded mid-July as a shopping season. Around $24 billion went to online retailers in the US during the 4-day period last week, which is more than a 30% increase from last year. For comparison, only about $11 billion were spent online during Black Friday in 2024. So this mid-July Prime Day event has become bigger than Black Friday at this point. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Canvu shares are trading higher this morning after their CEO is stepping down. Canvu is home to brands that include Listerine, Neutrogena, and Band-Aid. They spun off from Johnson & Johnson back in 2023, and they've struggled to find their stride since then. Last month, Reuters reported that Canvu was considering offloading some of its skin health and beauty brands as it wants to simplify their brand portfolio. Now, the stock was up more than 6% this morning, but it is down to 2%. So I guess investors must have quickly sold the pop. On the flip side, Affirm shares are down this morning after the stock was downgraded to a neutral rating from a buy rating. Increased competition from Klarna, PayPal, Afterpay, and other BNPL players is weighing on Affirm's profitability. I mean, that kind of makes sense because with more options, shoppers will go to whoever offers them the lowest rates, and thus the whole business model will end up getting homogenized. So as a result, shares of Affirm are down more than 3% on this news. That's all for today's show. Keep navigating those waters and see you tomorrow.